Good morning, everyone. This is Nate G. It is July 1st, first day of July. It is a short week with July 4th coming up on Thursday. Half day trading on Wednesday, and then most people probably expect Friday to be pretty quiet. Most people will be away for the long weekend. So we have 2.5 days of trading here, and I thought I would jump in and do a quick video on how to mark up charts, from scratch, and how to see, the things that you need to kind of be able to visibly catch when you just pull up a chart and start to mark it up. So what we'll do is we'll do this within the confines of the TPS trading method. Obviously there's a lot of other things you can be looking for when flicking through chart patterns. But if most of us in here, or a lot of us in here, trade the TPS method, then it probably makes the most sense to kind of learn how to glance at something and see if it fits, that sort of trade setup or not. So let's go in. I marked down a couple of charts that are kind of looking good. If y'all have some charts that you want me to take a quick glance at and kind of mark up from scratch, we can do that as well. And we'll just kind of run through a couple of charts that don't have any lines on them already, and then we can start to see whether there are patterns setting up that we like, or if it's just kind of a leave it be type of situation. So couple of the names I was looking at, I found these on Sam, the scanner, or Samuel the scanner, earlier this morning, that are setting up and kind of looking somewhat interesting. Here is SRE on. The squeeze goes all the way to the daily. It's interesting because if you look at this on a very short-term time frame, meaning you're only going back a couple of months, this starts to look like a pretty nice woodpecker or flag pattern, right? We have our uptrend here. We have our spike high. We are consolidating around the moving averages, and right now we're coming into buying zone type of regions. This name could be a great name to trade, but it would probably not fit my eye as well, because as we start to go further out, right, we look at a year's worth of time, we're not up near highs, right? In the longer term, we're just sort of chopping around in this kind of $86 to $70 range. Now, that doesn't mean that this isn't a good TPS setup and it's not going to, continue its trend up. But it kind of brings up the point of one of the most important things is to look for something that's in, an uptrend. So this is a daily chart on SRE. Now, here, it looks like a really nice TPS pattern. But when you scan out, it's not in a super clear uptrend. But if you look at a name like BSX on the daily, right, that is absolutely in an uptrend, right? This is the daily chart. So if I was playing, let's say, a 78-minute squeeze or even a daily squeeze up into this range here, that makes, for TPS, right, that makes more sense and is a stronger chart. So the first thing that we do when we start scanning for these TPS setups is we look at, what is the overall pattern doing, and is it in a strong uptrend, or is it kind of chopping around and consolidating, and not really doing a whole lot on the larger time frame? Okay. So step one is to really look at the overall. You can even go out to a weekly or a monthly chart to see where you're at, if things are going sideways. And then there's other times that people will put in something like, I'm trying to think of an example here, but we'll look at, let's say, let's do this. Let's put it like on a 30-minute chart. I mean, this isn't going to be a good squeeze play, but I'm trying to find a good example. Let's go to, Square, right? And somebody said, oh, look, you got a 30-minute squeeze on Square. I guess we do have a 30-minute squeeze on Square. And it's like, okay, well, that looks like, this isn't the best example, but I wish maybe we'll come across a better example as we start to scan or people start to throw in charts. And you're like, okay, this looks like a good looking chart. This is an example. I don't think this looks like a good looking chart. But then you go, okay, let's start marking this up on a larger time frame, and then you come out here and you're like, oh, I don't want to play that because this is a daily chart now, right? And it's consolidating, just kind of going sideways for many months, years even, and then you scan out and you're like, oh, also it's way down and it's just going sideways. So, excuse me, scanning, zooming out and seeing what the overall chart is doing is really important when it comes to marking these charts up. Even though you might, on a much shorter time frame, find a pattern that's working. And the only reason for that or that looks good, the only reason for that is you want to put the odds in your favor, right? You want to be in, if you're long, of course, you want to be in something that's in a nice uptrend, like a BSX, right? The chance that continues to go up is much higher than something like Square, which is just sort of consolidating down around its lows. Okay, so then if we look at something, we can mark up CAVA if you like, right? Does CAVA, you've probably already marked this up with Nate because I know he's in this and this chart looks great. This is the daily chart on CAVA, right? When you see this initially, that's in a clear uptrend, right? So if we have a squeeze pattern that we like on CAVA, then we know we're buying something or taking a trade in something long that has a higher probability of working in our favor. CAVA. I read CAVA and was saying favor and said CAVA. I said fava. So we could mark this one up, but I imagine you all have this marked up pretty well if you're trading it, right? And so before you trade something, you need to have your zones marked up. So that way when you come back to it, you know where your stop point is, where your point of control is, where your take profit levels are, etc. I think CAVA looks great. It's pretty awesome looking chart. And it looks like it's ready to go today. I said this morning I wanted it off about 91. And I didn't quite get that. 91 might have been a little aggressive. It didn't quite get down there, but it got pretty close. Right? So let's look at some of these other ones. BSX is BSX looks pretty good. It spiked up today and it is selling off pretty hard. You can see by this candle here. You can see that we just barely broke new highs on it. And it's selling off back into these moving averages here. So it could be, if you like BSX, it could be an interesting spot to potentially pick it up. But it basically, yep, it just popped to a new high and then it just sold off hard. But watching it here to see if it bounces could be a pretty interesting spot. And what's the overall market doing? Just kind of going sideways, so that's fine. So we could start to mark up a chart like BSX. We could look at ISRG. Hold on, let me go through my list. ISRG also selling off a little bit today. But you see that's in a very clear uptrend. We were talking about trading it down in here, and that would have been a great trade. A couple of, by a month out or so, 2 months out. Let's look at MMM. Yeah, so here's another one. Like, if you said, oh, God, this MMM on 78, 195, even kind of a daily chart. This one, I guess, is a little different because, well, no, not even. If you're looking here on MMM, like, oh, this is a pretty cool daily chart. And again, I'm not going to say that. I'm not going to sit here and say, well, okay, this isn't going to work because it's not in a clear uptrend, an overall uptrend. This could very well work. I mean, this could be the reversal in MMM, and it's going to continue going up for the next, many months. But, this looks like a great pattern here, and then you kind of scroll out on this daily, and you're like, oh, well, that's not really all that great. And so that's sort of another example of that, right? Okay, so that was MMM, TMUS. Let's look at that real quick, and then we'll start marking one up. I mean, TMUS, let me get rid of all these drawings. This is a daily chart on TMUS that looks pretty amazing. So I like CAVA. We can do two. So we're going to do CAVA because a lot of us are already in that one. We're going to do TMUS. And then should we do BSX? I liked BSX a little bit. And then what was the other one? Does anybody did we have another one, or does anybody have another chart that they really like that's in a good squeeze, in a clear uptrend? NVDL. Let me check it out. NVDL. Okay. ProShares 2 times long NVIDIA. I would just prefer to play NVIDIA, frankly. Yeah, we could mark that one up. All right, let's see here. I'm going to put a little question mark there. I'm not in love with that chart, but I love NVIDIA, so happy to do that one. Let's see. GoDaddy. Oh, interesting. Yeah, I've already marked it up, but I can just remove all of that. What's the daily look like? Yeah, that's pretty interesting. All right. What we can do is just, instead of doing, just one chart. Oh, what was the other one? Was it? It was, what's the Abercrombie and Fitch, ANF? Yeah. You see, I marked this one up with an actual trade, and it's looking real good. So we'll mark that one up as well. And did anybody take that trade that day I marked up that ANF trade? Yeah, I checked out Intap. I'm gonna put ANF on here too. We'll just do a bunch real quickly. So there'll be, it'll be more of a broader stroke chart markup. In tap, because you got to know how to do it kind of quick. Holy, in tap. I mean, in tap's just out of here. Let's see. Oh, baby. Dividend coming. And then OLLI. OLLI. Oh my goodness. Interesting. Bargain Outlet Holdings. Weird. I've never traded that before. Right at what? Right at 100. You know what my gut tells me on this one? And it's just my gut, right? I have been wrong many times. I will be wrong again. So take that for what it's worth. The fact that we came up here, right? We talk about these nice round numbers as being a magnet, right? We came up here and we just slightly pierced 100. And that's kind of, these nice big round numbers are kind of a magnet usually. And now that we've done that, it's consolidating. So I don't know. There's a piece of me that feels we can mark this one up. There's a piece of me that feels like this needs a larger pullback. So we'll do OLLI as well. We'll do OLLI first. How about that? Because whether it's going to go up or down or sideways, you still need to know how to write these up, right? JB, yeah, 50%. Nice work. Love to hear that. Lou, it's the LMT, or sorry, ANF was something I marked up, and I don't put trades in the trades tab. That's only Nate Bear. It's only Mr. Bear. Yeah, I had TMUS too. I bet on the list, so we'll do that one too. It was just I come in and I talk about the trades that I'm looking at or charts that I'm looking at, and then if I'm taking a trade in it, I put that in the chat. I don't put that in the trades tab. Neither does D-Man. So the only Nate Bear is the official trades tab. Nice, JB. Love it. Okay. So when you pull up a name like this, right, OLLI, and you're looking at it. Let's say let's say you're doing a scan. You get it here on the 78-minute chart, right? We've got a squeeze here on the 78-minute chart, right? It's not quite an A plus because we're waiting for that momentum to be rounding, right? And 195 is pretty, the 130 is pretty good. No squeeze on the 195. Okay. But when we talk about marking up charts, this is where this gets kind of key. So there's two ways to do this, right? The first way is, and they inform each other, so they work together, right? So what I see here is a spike high, right? And then I see a small pullback and consolidation. Now, this is on the 130-minute chart where I see a squeeze, right? The highest sort of squeeze pattern. There's one on the 130, 78, 65, 30, right? There's a bunch of squeezes, but I'm usually going to find it on the highest squeeze possible, right? And so from here, I can see some very clear things using both the chart and the volume profile here on the left. Okay, so from the chart itself, I can see all these wicks that are kind of coming down into a very similar spot. So if I put my cursor there, I don't know why it keeps wanting to jump around. I'm going to put, come on now, I'm going to put a line. Why won't it let me put a line there? All right, well, let's come up here. That's so weird. Let me put a line there. There it goes. Okay. So I'm going to put, and I usually put a yellow line in for a value area high, right? And you can kind of eyeball that a little bit, but then also if you see this node, this volume profile node over here, right? You're going to have a high where it tapers off, and you're going to have a low where it also tapers off. The low here is a lot clearer than the high because there's still a little data as this part pops up, right? So you're going to put in your high, sorry, and then you're going to come here, and you see I can see these, and I can put in my low almost visually with my eyes based on the chart. You see how these wicks come down, and that it gives you a couple. In fact, you could probably move that up a little bit and say that's your value area low. Okay, so I've got value area high, value area low. And then I'm going to come here to the clear point of control, and I'm going to put a point of control line there. Okay, so that's kind of the middle of this range. Okay, does that make sense? So I used both the chart, seeing the lines on the chart, and the bottoms, tops and bottoms of these areas, and then I also used the volume profile, and they sort of inform each other. Does that make sense? Okay, so now I'm looking at this on a 78, right? We found it on a 195, but I want to see more data. I want to provide myself more information, right? I would play this on a 195. I'm sorry, on a 130-minute chart. This chart, the squeeze. But now that I've put in my high, my low, and my midpoint, I'm gonna come down here to like a 5-minute chart. Now look at this. Now see how much more information I can see, right? And now I can look at my levels and say, yep, that's a pretty clear value area low, right? As you can see, we've found support here, here, right? We've found it here within this range. We've found it here. We've just found it here. This is kind of a breakdown and reclaim, but it's pretty clear. We've created it and found it here, right, when we had our gap close. So that to me is a very clear value area low for this pattern. Okay. Now I go and I say, okay, and I'm going to make this a 10-minute chart so that we can get a little closer to it, because it's been consolidating for so many days. I look at this and I say, yep, this lines up here. Okay, great. Okay, great. Like we're in good shape. There's a lot of things where I want them, and this value area high is a good value area high. Now I can see a little bit that my point of control needs to move up just slightly. Okay, now that we're a little bit closer. So there's my point of control for this whole pattern. Now, what I want to make sure I can do is see, because volume profile it's called visible range volume profile. And so it matters how much of the chart you can see, right? So if I'm only looking at this much of the chart, it's only showing me volume profile. See how it changed for that portion of the chart. But I want to see the whole piece of this pattern, right? So there, I can see that I've got all of those listed correctly. All right. So then usually if I think I want to maybe trade this, right, I'm going to come in here and I'm going to put another line at my spike high. I don't know what's going on with my lines at the moment. They're just not wanting to populate with my key commands. I usually make that green. And then I also use this fib retracement tool on the largest portion of the pullback, this pullback here. Go from the high to the low, and I just drop in another 1272 line up there as an extension, maybe possible target. Okay. and then I can get rid of that line there. Okay, so now I have some clear areas to trade this pattern in if I want to, right? This is my support level, right? This is my resistance level. I could choose to trade this, off of support into resistance, right? If it's not going to break, it might do it again. You could do that 1 or 2 more times potentially if it's not going to break. Or, maybe you buy it off of this and it breaks through and target 1 is here and target 2 is here, right? But then now that you have all of these levels lined up, okay, if I'm going to take a trade, let's say now, what's my risk reward here, right? Let's say I'm just targeting this high. Well, we've got a nice little tool for that if you use TradingView. And if you say, okay, I'm going to take it right here and I'm going to stop below this support level there, maybe give it a little bit of room. And I'm going to target that high. Well, this is a 9.5 to 1 risk reward right here. That's a good trade, unless of course you let this thing break down and you don't stop out. And so the reason for marking up charts like this and being able to see the important parts of the chart is that when you take a trade based on someone's recommendation and you don't have a clear level in which the trade is no longer valid, right? And you're just waiting for somebody to tell you to get out, it goes like this, it kind of bounces, it's like, oh, it's coming back, and then it goes like this, and you're like, oh my God, I'm running out of time on my option, and then it's down here and you're, 80% loss. When in reality, if this broke on the 130-minute chart, right, that would be a candle close below this level on the 130-minute chart. This trade is a bust, right? It's a bust. And what should you do when the trade is a bust? As soon as you know that the trade is a bust, what should you do? Yeah. Cut losses quickly, right? Manage your risk. But the only way you know the trade is a bust is because you've marked up your chart, right? That's the only way you're going to know. If you're waiting on somebody else to tell you what to do, you don't know, right? And so there are a number of ways to take trades based on this, right? Now, if we were playing for this to break down because it's already hit 100, right? Your stop level would be, this spike high, and you'd be shorting it. But this would not be the place to pick it up. You'd need to wait for a bounce off of this level and another move up into this resistance, right? If you liked this to roll over, right, then you would reverse that plan, but you don't want to buy. You wouldn't be taking a position here where it's at right now, right near that support level, right? Because your stop would most likely be way up here, and then your risk reward would be all out of whack. So you'd want to take something up here, right, with a stop there, and I don't know where you'd want to put your short, maybe this VP level over here, right? And then you'd have, a little over a 3 to 1 risk reward, which is good. But always keeping your risk reward 2 to 1 or better is really, really important. That's how you stay a profitable trader. Yeah, so that's a great question. How many candles to verify an exit? Well, for me, the way I do it is, remember, we took this trade, or this imaginary trade, right? This is not an actual trade at the moment, although it's at a good risk reward level. I'd be watching to see if we start to get a little bit of a reversal here at some point. So I do like this one, even for a move back up into 100. But we're trading this on the 130, right? This is the highest time frame squeeze that we have, right? This will be an A plus in if this next momentum candle or bar turns yellow, right? This would have to start moving up for that to happen. Then that would be an A plus setup, right? But for a stop, it would have to be something where let's say this candle, you see this candle wicked through, but it didn't stop there. Did you see that little reversal that looked like it wanted to happen? This one also wicked through. This one wicked through, but they didn't close there. So for me, it would have to be, let's say a candle formed like this, right? And it was a red candle. And then a new candle starts here. Well, this candle has now closed below that level. That would be a stop out. Unless the only time that would, and this is kind of semantics in terms of how you read charts. If you were doing this, right, and the candle, I don't know, let's say the candle, looked like that. And it had come all the way down and recovered all the way back. And then the next candle starts here and it looks like it wants to go up. Even though it closed just below that line, right? I'm saying that's starting to look like a breakdown and reclaim. So I might be watching it pretty carefully. Risk reward is here, over here on the right or left, sorry. It's the third one down under fourth one down. What would that be? 1, 2, 3, 4. Yeah, fourth. You can either choose a long position or a short position, and then you just put your box on there. You usually want to put your box where, right where you're going to take the trade. And then you can move your stop level to wherever your stop is, and your target to wherever your target is. And then right here, you can see a risk reward ratio, almost a 7. It's a 6.74, which would mean, that's 6-1 basically. White line is the 21 EMA. Yes, that's correct. So OLLI is coming into the 21 EMA on the 130. It's coming into its support level at 97.08, at least within this pattern. To me, this looks like a great spot in which to have a high reward to low risk trade. Now I say that because if you don't, how many times have you taken one knowing, oh, this is a great spot to take a trade because if it breaks this, I'm out. And then you watch it come down to here, you're like, oh, I should have stopped out, but it looks like it's going to bounce. So I'm going to hold that for a little while. Ooh, it's bouncing. This is awesome. Oh, crap. It just rolled over, and then you just never honored that stop level, right? And so you want to be careful with when you're at a good risk reward spot, those are great trades. But if it doesn't work, don't be afraid to cut it. Okay. So I know I've been on for a little bit longer than I wanted to be, and I didn't even get now let's go to A and F. So that chart is marked up. I was going to mark up a bunch, but when we mark up A and F, we look at this chart and we're like, oh gosh, this looks pretty darn amazing. And you can see here, right? We have this huge node that we're trading in right there, and we have a very clear support level. Right? You see where I'm putting my cursor there? Right here. We did have a little bit of a breakdown, but you can see this level, right? You can see it through here. You can see it here, right? And then when you draw your line on there, you have a very clear support level, okay? And you can see that it is also a value area low on your VRVP there. Up here, value area high, pretty easy to spot. We have our spike high there, and then we have kind of a flat level. All right, so we can come in and put another line there, and then our point of control Pretty easy to spot. We're above our point of control at the moment, right? And it's right there. So you can put in some secondary point of controls as well, right? And now I have a pattern developing. And what I'd like, if I want to take A and F long, right? You can see that secondary point of control level that we're almost up into. I'd like to see this kind of come up, hit that, come back and retest this point of control level before I move up, right? And even if we're testing just to move up to 193.63, right? If we look at our risk reward, if we wait, if we buy it here and our stop is here and our target is here, that's less than a 1-to-1 risk reward, right? That's no good, at least in my book. What I want is something further down with that point of control level, right? Okay, so if I'm looking at picking it up there off of that level, if it comes back, now I'm in a 3-to-1 risk reward, right? So that is much better and much clearer. But again, I have to honor my stop here. So that's like if we go, I'll do CAVA real quick. Right, CAVA looks phenomenal. Right, we've got our high there. Okay. Now this one's a little bit more confusing in the sense that, hold on a minute. In the sense that we need, our clear kind of bottom. Now we have kind of sort of a wedge forming or an ascending triangle, right? And then our main point of control levels are down here, right? So we're looking for a breakout up here. Our main point of control is very clear right here, right? And then I would argue that a breakdown of this ascending triangle is where I would want to stop on this pattern because it's a very clear trend line. And so I'm looking for, and it happened today, but when I missed it, if we look at this on this larger time frame, and I'm talking fast because I need to get off for Nate to do his PSU or PST, sorry. I'm looking at this now. I'm coming down to a, like a 3-minute chart, right? We came into this point of control level almost today. So if we get a pullback to like that 91.25 or even a pullback to 90.50, like this trend line down here, those are great risk reward pickup spots for me, to play this on a move well up into 100. 100 would really be my target, my initial target on this one. And I think that's very, very realistic. But now when I come to CAVA, right, and I'm like, somebody mentions CAVA in chat and I pull it up. Oh, look, I have my lines already created on this chart. So I know what I'm looking for. My value area highs and lows are always yellow. My point of control is always red. My targets are always green. And so I can kind of say, okay, yeah, this looks really good right here. And I don't have to like labor over what is this chart? Do I want this chart? What are my risk rewards here? Does that make sense? Yeah, Felix, I can show you VRVP settings here real quick. I have this at 150 at row size. And then I have my style at width at 40. Okay, I hope that was helpful in kind of pulling up charts really quickly and seeing the patterns that you're trying to play and being able to mark them up fast. It takes practice, 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 practice. So my recommendation is don't take a trade that you see or a recommended trade from anybody else until you can mark up the chart and you know where your risk reward is and you know where your stop levels are and you know where your target levels are. Okay. I will. I'm going to hand it over to Nate, but then I will be in chat all day. So I will talk to you all later.